And we are live now. And good evening again, Catherine. How are you this evening?
I'm doing great, thank you. I hope you're having a wonderful evening as well. Whenever you're ready to jump back into the market discussion or anything else, just let me know.
Well, I sure am. So let's talk about today's markets and what happened. Today being December 29th, 2025. Let's get into the numbers for the TSX, for the S&P 500, and gold and silver, and let's take a look at what happened on the markets.
On December 29th, 2025, the market saw some notable corrections. The S&P 500 closed at about 6,903.60 points, down roughly 0.24%, while the S&P TSX Composite in Canada ended at about 31,896.59 points, down 0.32%. In commodities, gold softened to around $4,452.45 per ounce, and silver dropped to about $74.84 per ounce. These shifts reflect some profit taking and market corrections after earlier gains.
And let's talk about let's talk about the commodities first. Let's talk about gold and silver. They saw some pretty volatile movements today. Could we get into that a little bit and tell me what happened?
Absolutely. On December 29th, 2025, both gold and silver experienced notable volatility. Gold, after reaching higher levels earlier in the session, ended the day at approximately $4,452 per ounce, which reflected a pullback from its recent peaks. This decline was largely driven by profit taking and some technical corrections as investors locked in gains after a strong year. Similarly, silver also saw a sharp decline, ending around $74.84 per ounce. This drop was partly due to profit taking as well, along with adjustments in futures contracts and some shifts in market sentiment. Overall, the movements in both metals reflect a mix of strong yearly performance and the natural ebb and flow of the market at year end.
Right. And what is the long-term outlook for the precious metals complex right now, specifically gold and silver? Would you say that we're still in a bull market for that? And are you willing to speculate to any price targets that we can see perhaps within the next month or two?
Certainly, the long term outlook for precious metals, especially gold and silver, remains generally positive. Factors like ongoing geopolitical uncertainties, inflationary pressures, and central bank policies tend to support a bullish environment for these metals over the long term. In the short to medium term, we might see some fluctuations as the market digests recent gains and adjusts to year end dynamics. That said, if economic conditions and inflation concerns persist, we could see gold potentially testing new highs in the coming months. Similarly, silver, often more volatile, could see significant price movements depending on industrial demand and market sentiment. While it's always challenging to predict exact price targets, we might see gold pushing toward the $4,500 to $4,600 per ounce range, and silver could potentially test or exceed $80 per ounce if the bullish trend continues. Of course, market conditions and external factors will always play a role, so it's good to keep an eye on development as they unfold.
Right. And Catherine, let's pivot over to the S&P 500. Can we talk about what was the price action in that index today?
On December 29th, 2025, the S&P 500 closed at about 6,905.74 points, which was a 0.35% drop from the previous session. The index fluctuated between roughly 6,088.76 and 6,920.21 points during the day. This modest decline was driven largely by a retreat in technology stocks, particularly those linked to artificial intelligence. Nonetheless, the S&P 500 remained significantly higher over the course of 2025.
Right. And there's been a lot of talk about the S&P 500 being in an AI bubble, um, and that we might see the bubble pop or it may continue. What is your assessment of that? Do you think that the S&P 500 is in a bubble, and do you expect any corrections, or do you think that it's going to chug along and make new highs starting off the year in 2026?
The debate around an AI bubble in the S&P 500 is definitely a hot topic. On one hand, the rapid growth and investor enthusiasm for AI-driven companies have certainly driven significant valuations and contributed to the overall index performance. On the other hand, there are concerns that some of these valuations may be stretched and that we could see corrections if investor sentiment shifts or if growth expectations are not met. In the near term, we might see some volatility as investors reassess valuations and as the market absorbs economic data and policy changes. However, if the fundamentals remain strong and AI innovation continues to drive growth, we could indeed see the S&P 500 push to new highs into 2026. It's a bit of a balancing act, and it will depend on how the market digests both the macroeconomic environment and the ongoing developments in AI.
Right. And what are the top seven components or companies or stocks or whatever you want to call them that make up the S&P 500? Would you be able to list those for me?
As of December 29th, 2025, the top 7 companies in the S&P 500 by market capitalization are Apple, Microsoft, Nvidia, Amazon, Alphabet, Meta, and Tesla, often called the Magnificent Seven. These firms collectively represent a large portion of the index's market value. Each company from Apple and Microsoft to Tesla plays a significant role in shaping the S&P 500's performance.
Right. And what is the market cap of, let's say, the total of these top seven companies in terms of valuations?
As of December 29th, 2025, the top 7 companies in the S&P 500 collectively have a massive market cap. Nvidia leads with about $4.6 trillion, followed by Apple at $4 trillion, Alphabet at $3.8 trillion, Microsoft at $3.6 trillion, Amazon at $2.5 trillion, Meta at $1.7 trillion, and Broadcom at $1.6 trillion. Together, these giants represent a significant portion of the S&P 500's total valuation.
And what is the percentage? So, what is the total market cap of these seven companies, and what percentage does that represent in the S&P 500? Would you be able to give me any insight into that?
As of December 29th, 2025, the top 7 companies in the S&P 500, Nvidia, Apple, Microsoft, Amazon, Alphabet, Meta, and Tesla, had a combined market cap of around $21.8 trillion. Given that the total S&P 500 market capitalization was about $58.6 trillion, these 7 companies accounted for roughly 37.2% of the index's total valuation. This really highlights how influential these tech giants are on the broader market.
Okay, and have any of these top seven companies had any corrections over the past, say, 6 months?
Over the past 6 months leading up to December 2025, the top 7 S&P 500 companies have seen both growth and corrections. For example, Nvidia experienced a significant rise, but also faced a recent dip of about 1.2%. Alphabet and Amazon both saw substantial growth, yet each faced corrections of around 14.5% from their recent highs. Apple and Microsoft also saw notable gains, but encountered similar corrections. Meta experienced a slight decline overall, while Tesla, despite growth, also saw corrections. In summary, while these companies performed well, they all experienced some level of correction, reflecting the market's dynamic nature.
Okay. So now let's pivot over. Let's talk about the TSX, and let's just quickly recap what the numbers were with where the TSX closed today, and what were the leaders and what were losers on the TSX.
On December 29th, 2025, the S&P TSX Composite Index closed at 31,896.59 points, down about 0.32%. Among the top performers were Terravest Industries, which rose by 3.35%, Tech Resources up 2.56%, and Pado Exploration, which increased by 1.89%. On the other hand, the top decliners included Sibanye-Stillwater, which fell 8.66%, Harmony Gold down 7.39%, and Anglo Gold Ashanti, which decreased by 6.12%. This activity was largely influenced by a pause in the recent rally of precious metals impacting mining shares.
I see. And let's talk about the Canadian financial stocks for a little bit. I mean, we have the big five banks and we have a few insurance companies in there. Can you talk a little bit about that and talk about how they performed over the past year and how they're holding up in the broader market, so to speak?
In 2025, Canada's major financial institutions, including the Big Five banks and top insurance companies, showed strong performance. The Big Five banks like Scotiabank and RBC reported impressive profit growth and solid earnings across various sectors. For example, Scotiabank saw a 50% profit growth in its global banking sector. Meanwhile, Canadian insurance companies like Manulife also performed well with strong returns and increased premiums. Overall, these institutions showed resilience and significant growth throughout the year.
Fantastic. And what's the outlook for Canadian financial institutions and their growth, specifically ETFs and that sort of stuff for 2026?
Looking ahead to 2026, the outlook for Canadian financial institution ETFs is cautiously optimistic. Analysts expect modest economic growth in Canada, with real GDP rising by about 1 to 1.5%, which should support financial institutions' performance. The stability buffer maintained by Canada's top banks also reflects their resilience. Overall, this positive environment should benefit Canadian financial ETFs, though investors should remain mindful of potential risks and market shifts.
Right. So let's take a look at these four items here. We have, for example, the TSX financials. We have the S&P 500, which is made up of mainly tech stocks, and then we have gold and silver. For people that are investing, what is the best way for people to kind of allocate their investments in terms of risk management and growth for 2026?
When it comes to allocating investments for 2026, a balanced approach is key. For growth, tech-heavy indices like the S&P 500 can offer significant upside, especially if AI and innovation continue to drive growth. However, they do come with higher volatility, so it's good to balance out with more stable investments. Canadian financials like the Big Five banks tend to offer steady dividends and stability, making them a solid core for a balanced portfolio. Precious metals like gold and silver can act as a hedge against inflation and market volatility, providing a level of safety and diversification. In general, a well-diversified portfolio that blends growth-oriented assets like tech stocks with stable income-generating assets like financials and hedges like precious metals tends to provide a balanced risk-reward profile for investors.
In 2025, we saw an enormous run up in metals. So we saw gold really rise, we saw silver exploding. And can you elaborate maybe a little bit on what's caused this to happen?
Absolutely. The remarkable rally in precious metals in 2025 was driven by several key factors. First, inflationary concerns played a significant role as investors sought safe havens to protect their wealth. Second, geopolitical tensions and uncertainties prompted increased demand for gold as a safe haven asset. Third, central bank policies, including lower interest rates and quantitative easing, made non-yielding assets like gold more attractive. Additionally, the surge in industrial demand for silver, driven by its use in electronics and renewable energy, also contributed to silver's explosive growth. Finally, speculative interest and investment flows into precious metals ETFs and funds further fueled the rally. All these factors combined to create a perfect storm for the significant run up we saw in 2025.
Right. And I want to talk about the Canadian stock market for a little bit. I mean, is the Canadian stock market something that we see a lot of foreign investment in? And what are the reasons behind the investments or lack thereof, depending on which it is? If you can give some insight into that.
In 2025, foreign investment in the Canadian stock market increased significantly. This was driven by strong economic performance, particularly in the materials sector, a favorable business environment that made Canada attractive for investors, and strategic government initiatives like increased infrastructure and defense spending. Additionally, Canadian companies demonstrated strong earnings and appealing dividends, making them attractive to income-focused investors. All these elements combined to bolster Canada's appeal as an investment destination.
I've heard recently that, as a speculative thing, some people have mentioned that things like not just precious metals, but things like commodities like oil may start to rise. Oil companies may start to do better in Canada, and that there's certain other metals like copper that can see also a rise in price. Is this something that you've heard of, and can you maybe shed some light on what's going on there? Is this true, or what is your prognosis, if you will, on that?
As we look ahead to 2026, Canada's commodities landscape shows a mixed outlook. On the oil front, global oversupply is expected to keep prices under pressure, potentially averaging below $60 per barrel, which could challenge Canadian oil producers. Conversely, copper prices are projected to remain strong, driven by demand from renewable energy and electric vehicles, potentially averaging around $11,000 per ton. This bodes well for Canada's copper sector, indicating potential growth and investment opportunities. In short, Canada faces a nuanced economic environment in 2026 with oil sector challenges and copper sector opportunities.
And just out of curiosity, it just kind of popped up in my mind. I was thinking about lumber, and I know that Canada does have some solid lumber industries, especially out on the West Coast, such as in British Columbia. Are there any companies that are seeing, or any lumber companies and their stocks that are performing well, or how have they performed over this past year?
In 2025, British Columbia's lumber industry saw a mix of challenges and growth. Western Forest Products reduced production by about 6% due to temporary curtailments, while Canfor closed its Polar sawmill permanently, impacting about 180 jobs. On the other hand, West Fraser Timber delivered strong earnings, surpassing expectations, and the province also showcased leadership in mass timber at the Woodrise 2025 Congress. Overall, the industry showed resilience, especially in mass timber innovation.
Okay, well, that was awesome. I think that that wraps up this discussion for today about the stock market, and I think that I've asked everything that I want to ask. Thank you very much for your time and for giving all that information about what's going on in the markets, and we'll definitely keep an eye on what's going on.
You're very welcome. I'm glad I could help, and I'm always here if you have more questions in the future. Definitely keep an eye on the markets, and I look